My name is David Nielsen. That picture that they got is you're right, it's old, needs to be updated, so I'll take care of that. So this is my first time up on the stage presenting, so how many of you guys are Ted Lasso fans? Hands? Maybe a shout. Okay, so there are people out there. I am too, love that show. So what I'm going to ask is for you guys to be like a goldfish. If I totally screw up, I want you to just be a goldfish and forget it. For those of you who are not Ted Lasso fans, watch this show. It's great. So our topic today is, we want to share some insights that we've gained in partnering with Freddie Mac and within our own business. I think most of you know that Optimal Blue is part of the Black Knight family, as is our data and analytics division. So we've kind of brought some data together that we're going around the country and sharing with clients, prospects, in kind of intimate settings. We had one of those here on Tuesday. We're calling them our Origination Technology Summits. And it's really our attempt to kind of collaborate with you all to identify ways that we can jointly drive down our cost to originate and ensure the viability of our businesses. We've had 6 of those so far. We've got a couple more. And I don't know if some of you are in the room that attended on Tuesday. If you are, then really appreciate it. So what I'm going to do is take kind of just a high level of what we shared with our folks on Tuesday and that we're sharing around the country. I hope it's beneficial, that there's something you can take back to your business to improve what you do and how you do it. I will ask for a little bit of feedback throughout the talk here. So one, make sure that you guys are engaged and still alive, and also I really value your feedback. So the idea of these sessions is to be collaborative and not for Black Knight to be talking at our clients and prospects, but really to be collaborating with you. So I want to take advantage of that opportunity today as well. So kind of to that extent, I'm not looking for you to share your cost to originate, but can you guys just shout out, what's the cost today for a lender to originate and close a loan? I'm sorry? 13 to 15. Anybody else? 10? 12, okay? I feel like an auctioneer. Do I have 16? 16, do I? 12.5. So yeah, you guys are all kind of in the range. You guys probably know this better. Well, of course you know this better than I do. That's your business, right? What I'll share with you is that cost has gone up exponentially. The slide I'm sharing with you here does come from Freddie, and I'll be just really transparent. This is the money slide. This is really the crux of why we're going around the country and sharing this information with folks like yourself. And it's kind of there in red. The per loan cost of $4,000 reduction, or 45% lower cost to originate. How are they doing that? What Freddie found was that the top 25% of lenders who effectively leverage their tech stack are able to originate at a cost of $4,000 per loan less than the industry average. What could you do with another $4,000 per loan? Probably quite a bit, right? So I think that really is the premise of this discussion today. We'll share with you, or I guess I'll share with you, what we gleaned from this report, and I'll kind of finish with kind of 10 tips that we identified that we feel like you could take back to your business to help gain some of these efficiencies that Freddie identified. If you could get $4,000 more per loan, would that be meaningful? Yeah, I think so. And let's see. There we go. Next slide. So this slide really identifies, and I think you guys can see it. It's a bit hard for me to see on the screen, but the top performers are 3 times more efficient than the bottom counterparts. And I'm not asking people to raise their hand and say, you know, what tranche are you in? But if you're on the higher end of that cost to originate, then you probably have more opportunity in your business than maybe who's somebody that's lower in that cost to originate, right? So, but the average lender can conservatively accumulate incremental revenue as high as $3.2 million a year. And again, obviously that, and in one slide I'll show at the end, it talks to the volume, right? If you're a large money center bank, or, oh wow, if I do that I can see you guys. But if you're a large money center bank, you know, the amount of opportunity is maybe a little greater for you because volume does come into play in the calculation of that cost savings that you can expect to get. But I don't know about you. I've been in the business since '93. I have never seen a market where the interest rates have doubled in less than a year, and volumes have plummeted so precipitously. I know that that's something we're all talking about. It's something you're dealing with on a day-to-day basis. And I don't know that any of us have the answer because, again, this is unprecedented. But what we do believe is that as tech vendors to the market, it's our responsibility to come alongside and do everything we can to help you be as competitive as possible. And what I'm sharing with you today, yes, Black Knight has solutions that we believe can help you derive these gains, but by no means is this a Black Knight value prop alone, right? There are other technology partners out there that you can engage that can deliver some of these benefits that I'm going to talk to. And our strong encouragement is that you'll leverage us and some of those folks to put a tech stack together for you that's going to help drive these efficiency gains that we'll talk about. So how many of you have implemented tech in the last few years to help drive efficiency within your business? Anybody? Couple hands? Okay. Just maybe, did you get the benefit that you were expecting? Not always? The guy in the front row is going to get called on because he raised his hand. Sometimes it's worse. Okay. So certainly not ideal. As a tech vendor, let me apologize on behalf of all of us. That's not the intent. But sometimes what we do, we have the right intention, but maybe we just didn't find the right tech or the right partner. Some of the challenges that we identified in this study, there were really 6. I don't need to read a slide to you. You guys can see them. But, my guess is these probably resonate. With too many vendors, some of the talk track we've had with these origination technology summits is they don't work together. Some of them don't like each other. They won't integrate with each other. Maybe that tech is owned by a competitive partner or that integration portal. And so although the tech, when that tech vendor demoed it for us, showed it to us, we talked maybe with one of their clients or a couple of their clients and saw what they were doing and getting the benefit of, it looked great, but then when we get into trying to implement it in our business, we can't make it work because that technology vendor doesn't necessarily integrate with our core LOS or with our servicing platform or our core banking platform if you're a credit union or a bank. So loss of flexibility, system performance. Some of that came from clients who said, yeah, the technology was there, but we didn't have the ability to configure it. We didn't have the ability to manage it. We had to go to the vendor. Then we had to wait in line. We had to, get BRDs and sign SOWs, and it wasn't as nimble as we were hoping. The support, I think that kind of goes across all industries. I don't think that's specific to mortgage. Some of us are better at servicing our clients, some of us aren't. I think that goes for lenders as well, right? So probably nothing earth-shattering there. Runaway mortgage origination costs, that's why we're here. So nothing earth-shattering there. But then limited innovation and data functionality. One of the things I'll share with you that I had a client last year that I was engaged with, and she asked me for my roadmap. Said, sure, shared the roadmap. She said, I'd like to see your roadmap from 5 years ago. I was like, why? She said, because I want to see what you've delivered on what you expected. We've had challenges with vendors who have said, here's our roadmap, here's what we're going to deliver, and it's 5 years later and we don't have it. So I thought that was a really interesting request, which, we delivered to her. I'll tell you, we did pretty well there. I've been with Black Knight 4.5 years, and the innovation and investment we've made has been fantastic. As SVP of sales, it's made my job pretty darn easy. But there were some items on that list that we hadn't hit. And so, it was a chance for us to kind of look in the mirror and reflect and figure out how we can do what we intend to do, how we can do that better. But I think that's a good takeaway, is to sit down with your vendors and say, hey, not only do I want to see your tech stack today, I want to see what it was a few years ago. Have you delivered on it? Can I count on you to deliver on the one that you're showing me now? So some of you have implemented tech to help in your business. This is a screenshot of our point of sale. It could be any tech, right? I don't have screenshots of my competitors' tech or other vendors' tech, but the idea here is one of the keys that we found was creating an exceptional user experience. And I don't mean just borrower. Internal users as well, right? Your processors, your underwriters, your funders. Management, how do I get the data? How do I get reporting? How do I have my finger on the pulse of what's going on without having to jump into the tech, And so what I would say is, that ability to engage throughout the loan life cycle is really critical. And as we're moving downstream, and we've got the Gen Xers and the Gen Zs and folks coming in, what do they want to originate on? They want to originate on one of these, right? They want to be in the train on the way to the office and apply for a loan. But they don't want to just apply for the loan anymore. They want to do everything on that device. They want to be able to know what's going on the loan. They want to be able to upload and view and upload docs to satisfy conditions, be notified. They want to stay engaged throughout the entire, these are people that are on their cell phones 4 or 5 hours a day, posting and selfies and, everything. They're engaged in their phone, right? They want to be engaged in the loan process. I have a niece who we just helped, get into her first home in Berkeley. And there was a couple of clients that I had up there, and I put her in touch with them, and I said, hey, here's my niece. I'll help make sure she's got all her stuff and walk her through, and I think it'll be a nice, quick loan for you, first-time purchase. The real estate agent, put the fear of God in her and said, you should do business with these folks. Otherwise, you may not close on time. And so she responded to fear of loss versus hope for gain, and went with that lender and had a horrible experience. And I asked her what was, and it was really that engagement model. She didn't feel comfortable that she knew what was going on with her loan and what was required of her. And then they got to closing, and there was a couple of closing conditions that miraculously popped up that she wasn't aware of. She said, if I'd have known about it, I could have taken care of it earlier. So this was a key point in the study. Here's an example of a workflow automation that we at Black Knight provide to our clients. And it's not rocket science, but I've had some prospects go, wait, you can do that? And so I guess, one of our tips is, find a tech partner that allows you to automate your workflow and to, automate manual processes in your workflow. There's a lot of gains. There's obviously the labor savings gain, and I have a slide on what Freddie Mac feels that is per hour on a fully loaded basis. But then there's also the cost of money, right? For every day you can close a loan faster, what is that? A basis point, maybe? So there's real value in automation, and that's where a big part of that $4,000 savings came from. The most efficient lenders were closing loans in less than 20 days. I think the average lender today is around 40, 41 days, something like that. So, when you take into consideration that savings, but not only that savings, but the return you're going to get on that customer experience, because if you crush it and you close my loan in 18 days, I'm not, wringing my hands at the closing table wondering if we're going to close today or not. You're going to get your referrals and references, et cetera. But this one happens to just be on the appraisal process. Within our Empower LOS, it's highly configurable. It's going to order the right appraisal product from the right appraisal partner, and it'll go through that decision logic. And if it's not a single-family residence, okay, well, is it a one unit or a co-op? Is it a condo, et cetera? And we'll go through and automate that. So what does that save in your business? When that appraisal comes back, the XML data is populated into the LOS. Over 1,200 different data points are populated, and it fires a task for the appropriate reviewer in your business to go in and review that appraisal and the data. Again, we're not the only ones doing this, but this is the type of thing that's going to drive those cost savings. Another area for automation is AI. I know that Greg McElroy hosted a session yesterday I sat in on. By the way, if any of you guys are in the room that ran that, you did a great job. I took away some really nice learning from it. But AI is here to stay. The question is, how do we leverage it to benefit our business? And what we found was there was some really low-hanging fruit. So if you're not leveraging a tool to bring in docs, don't make your borrower, your people, index docs and split them and name them and put them in the right placeholder. Technology can do that for you. Ours, others. This is a really easy area to gain some nice efficiency. 1 to 2 hours per loan when you consider the origination process as well as closing, post-closing. So AI is a great area for you to leverage and get some easy wins. Additionally, there's some ways that we're using AI. We can and do split name index the docs, put them in the right placeholder. And because Empower is a data-driven, task-based workflow solution, that right user gets the right task served up based on that document coming in. So nobody has to go in, figure out, is the doc there? Okay, now who do I tell? No manager has to tell a user what to do today, right? The system is just telling them, do this, and they go through and they knock out tasks. So it's kind of similar to the old Model T assembly line, right? So that life cycle approach to lending, milestone driven, that's kind of like the Model T, right? That was great back in the early 1900s. Ford built a humongous business based on that. But then in the 70s, when robots came out and they were able to replace humans and put on hundreds of parts at the same time, they were able to build exponentially more cars per day, right? So AI will help you get there. And one of the things we're doing is, I would love to share it with you if you guys are interested, but our Underwriter Assist product, and it's really probably misnamed. It should be like Operations Assist, because what it's doing is it's taking the documents, the income docs, splitting and indexing them, taking the data off them, even complex tax returns for self-employed, et cetera, pulling the data off and doing your income calculation and presenting that to your user. Could be the underwriter, could be a processor, et cetera. huge time savings, right? And again, we're not the only ones. Folks like Candor are doing it, et cetera. But you absolutely should be leveraging AI. So what do you get when you reduce your cost to originate? So this is the figure I was alluding to earlier from Freddie, but for a processor and an underwriter, kind of there in the middle under the 37 plus 62, it tells you this is the fully loaded hourly cost for processing and underwriting. And so for every hour you can save, you're going to gain 132 bucks. This is the cycle time savings I was alluding to. And in Freddie's study, they're only using 0.075 basis points a day. I've had, some of you, lenders have told me that their cost is somewhere between 1 and 2 basis points. What do you guys, shout out some numbers. What is the cost of money for you guys? Do you know? If you don't, you probably should.
Extension fee is 2.5 basis points.
Extension fee is 2.5, okay. That's material. Just your warehouse line, right? If you can utilize that more effectively, what does that do for you? I think one of my buddies is here from OptiFunder. I know they do that and help lenders optimize their lines more effectively. But what Freddie is saying is it's 22 bucks a day. So if we take that 41, 42 days, whatever it is, the average, and we take them down to say 20, which is where the top 25% were, they were all under 20 days. What is 10, 12 days at 22? That's real money. That pays for the entire closed loan fee from an LOS provider like myself. Okay. So this one here is the slide I kind of alluded to at the beginning. On the right-hand side, you'll see large lenders. And again, these are averages, so don't think that this is them talking to you about your business. But you can see that the larger lenders, because of volume, their average production revenue per loan is a little bit higher, and then the smaller lenders is a little lower. Okay, but in the red here, that's really kind of what I wanted you to focus on. Is that in the survey we found that Freddie is stating that a lender can save between $200 and $700 per loan in personnel and cost of funds related to expenses by leveraging technology offerings, while the cycle time production related savings can vary from 5 to 18 days. I thought that was really material. And some of you might be thinking, bullpucky. Maybe that's not the word you're thinking. But, this study is actually on Freddie's site, so it's not something that I'm going to keep from you. Feel free to download it, take a look at it. Will you get 4,000? I don't know. Maybe. But if you could get half of that, what does that do to your business, right? Huge benefit. So one of the last things I'll share with you that kind of came out, and this is a bit of an advertisement, full transparency. At Black Knight, we feel like we provide best in breed. We do have that ability to allow our clients to pivot. We've got credit unions that are going into correspondent, adding that channel. We've got folks, assumption loans for banks, credit unions are off the charts, as you can imagine, right? If somebody has a 2.5% assumable 30 fixed, they can sell their house for $50,000, $60,000 more than the guy next door. So assumption loans. And so, we've got, how many of you are IMBs that are looking at or have gotten into HELOCs? Yeah. Who would have ever thought it, right? So you need technology that allows you to pivot. And our Empower platform is an omni-channel platform. You can originate, one instance of the software and stand it up. You don't have to have separate user IDs, separate instances, et cetera. But then that best of breed, right? Optimal Blue, best in breed on product and pricing engine, and Surefire, best in breed on the CRM marketing solution. Ernst for the fee engine, et cetera. So, and that really helps us address that number one problem that lenders have is with with all of their vendors working in concert together. When you own it, and you integrate it and deliver it, you've got one closed loan fee, and you don't have vendors pointing at each other. So sorry for the commercial there, but I think it makes a huge difference. And then what I'll tell you is the ROI. You should absolutely force myself, my competitors, my partners, any tech vendor that you're going to do business with should sit down and give you an ROI, right? We all talk about it. Hey, you know, you're going to be more efficient, you're going to gain, and we throw out all those buzzwords. Make us prove it out to you. And what I'll offer you is I will be happy to do an analysis of your tech stack, share with you what we would suggest, and I'll price it out, and I'll give you an ROI, and you don't have to go through a demo to get to it. I'll flip the script. I will talk to you about what you should expect to save, what the cost would be, and if it's meaningful, all I ask is you give me 2 hours to let me show you the software and prove out how we're going to deliver it. With that, I'm done. I'd love to talk with you guys afterwards, but thanks again for coming, making a first-timer feel a bit comfortable up here. I hope you have a great conference and a wonderful day. God bless.